How much of your account should you risk per trade? We suggest never risking more than 2.5% of your account in a single trade. Let me just show you an example of the difference in risking, let's say, 2% versus 10%. Look at this chart. You can see the difference between risking 2% on each trade versus risking 10% on each trade, and the difference it can make on your account if you have a losing streak. For example, you can see here that with a $20,000 account, if you risk 2%, it's going to be risking $400. On a $20,000 account, if you risk 10%, you're risking $2,000 on a single trade. Then what you can see here is if you had a losing streak. So let's say risking 2%, you lost 1, 2, 3, 4 in a row here. Your account would then have $18,824 in it. Whereas over here, if you're risking 10% and you lost 4 in a row, your account would only have $14,580 in it. So you can see here that if you risk too much on a single trade, your account can start to diminish very rapidly. And look, if you lost 10 trades in a row with risking 10% on each trade, your account would go from $20,000 all the way down to $6,974. Whereas risking 2% after 10 losses in a row, you would still have $16,675 in your account. Look at that difference of about $10,000 or 50% of the starting balance of $20,000. The point of showing you this is that if you have this losing streak, you don't want to lose half of your account. You want to set up your risk management rules so that a losing streak doesn't destroy your account and all of your profits. I want to point out something that's really interesting that some traders don't realize, which is what it takes to get back to break even after losing trades. This table here illustrates what percentage you would have to make to break even if you were to lose a certain percentage of your account. For example, if you lost 50% of your account, to get back to break even, you would now have to make 100% of your account balance. So think about it like this. Let's say you had $1,000 in your account and you lost 50% of your account. Now you would be at $500, right? So to get back to 1,000, you have to make back $500. But now you only have $500 to work with, which means you have to make 100% return on your $500 in order to get back to your starting balance or break-even point of $1,000. And you can see the more you lose, the harder it is to get back to your original account size. This is exactly why we are talking about avoiding losses and minimizing the percent loss on your account per loss. So by now, I'm sure you've realized that you should place each trade only risking a small percentage of your account in order to survive any losing streaks. Remember, you want to be the long-term winner like the casino and not the gambler.
Hey, thanks so much for watching. Make sure you join our free Discord channel to get access to all the cheat sheets and a bunch of other cool bonuses. The next video in the course is right here.